Okay, good morning, ladies and gentlemen. Welcome to the live morning briefing with your host, Tony. So let's start off the day just by looking at some market news from the morning. So from the Guardian article, it says that Trump wades further into China COVID-19 row as the focus turns to easing lockdowns. Now he's expected, or he is looking to ease the lockdown by May the 1st. It's still to be confirmed yet, but he is expected to announce the new guidelines today at helping states with low virus transmission rates to ease the restrictions sooner than the 1st of May, claiming that some states were chomping at the bit. So they were saying that some states were looking to reopen, which is a bit of a surprise considering how you have other nations globally saying that they're not looking to open straight away. And we'll go on to our next little bit, going on to explain that. But for the US, if we look at some figures, if I just bring that up for you guys here. Here is what we can see so far with the number of coronavirus figures. So Italy is starting to peel off a little bit more. The UK is also starting to see a bit of a peak here. In the US, we do seem like we're nearing our peak as well. So maybe, if we're thinking about the 1st of May, is that too soon? In my opinion, from here to start to reopen the economy? Well, I still think it is, but if they're going to take this approach where they open up areas where where the coronavirus cases are not as severe compared to other states such as New York or New Jersey, and you're going to and you're looking at other states that are maybe in Texas where of course it's quite widespread. Not everyone's too closely compact together. Then yeah, it seems okay for May the 1st. But still, in my opinion, it's a little bit too soon to reopen. But those are the numbers that we can see so far. We are peaking a little bit on US coronavirus figures, in China completely down. As always, Germany. Now, Germany, the next headline that I want to talk about. Okay, so Germany is set to lift the lockdown cautiously whilst calling for UK exit strategy gets louder. So Germany announced yesterday that small shops will be allowed to reopen from Monday, April 20th, which is quite a positive sign. Again, showing that, well, Germany, as I showed you before, with their coronavirus cases, their numbers had peeled off quite quickly. And they've got back into control of taking control of their nation. So this is, as I said, it's a positive sign coming out from Germany. What they so as if we go back to the article there. So the only reason why they would open up these shops again is that when these shops reopen, these small shops, as long as hygiene and social distancing measures are in place, according to public broadcaster Deutsche Welle. In addition, large car dealerships, bike shops, and bookshops can also reopen. Schools in the country will open their doors on Monday the 4th, giving priority to students that have to take exams. So again, just positive signs here that Germany is reopening their economy. Germany's been praised for its handling of the coronavirus. It has over 127,000 confirmed cases of the virus, but it's seen a fraction of the deaths. So the current death toll sits at 3,804, which is much lower than any other European nation or any other nation so far compared to Italy and Spain. If we take a look at the charts just to see where sentiment kind of sits at the moment, so we can see here that we'll take a look at the Dixie as a safe haven asset. As we can see here, we did see a little bit of movement in the night of just some movement back towards the upside. Now we are kind of holding out here at the moment. So, but if I go into a daily, let's have a look there. So this is where we kind of sit again here. Movement of where the dollar was seen as, where the Japanese yen was first. Japanese yen took over, and you saw strengthening in the Japanese yen and weakening in the dollar. And then you see resurgence in the Dixie being a safe haven, being taken up again as being cash being king here. And now we're just kind of sitting idly at around this level or this area around here. If we just draw a level just to see where we are, we've got a bit of support here and a bit of resistance that we can kind of see at the moment. Right there is where we see some resistance on the Dixie at around 182, and then a bit of support at 98.27. So again, not too much of movement going on today at the moment, but again, and only do you have, so for today's economic releases, just to keep in mind that we do have our initial jobless claims. That's forecasted to show a decrease in the number of initial jobless claims. So from 6,606K or 6.6 million to 5.350 million as the forecast. So again, numbers are getting better forecast wise. So that's what we're hoping for, is that market reactions would be more positive. But at the moment, as I said, what we can see, if we go back to a minute chart here, at the moment, things are not moving too much at the moment. Everything's kind of just sitting idly. If I just had a look at USD JPY, just to get a comparison, that's where we currently sit at the moment. So we are seeing a little bit of down. So last night, actually, so this is where I had a look last night and just seeing how far this would move towards the upside, and it did get higher, did create a new high compared to the previous high that we had yesterday to get around here. But now we're seeing just a bit more downside movement at the moment. It is up by 0.20% or 0.20% at the moment here on the Dixie. But again, we'll continue to keep that in the back of our mind when we do get initial jobless claims. I'm not expecting too much movement, as numbers are expected to look quite bad. But this is but hopefully we can get out of this slump that we currently sit in for US initial jobless claims in about a couple of months or so. And considering if the US is seeing some peak in coronavirus cases, that couple of months seems more likely to see a depreciation in the number of initial jobless claims. Okay, let's take a look at some other bits of news as well. So, talking about initial jobless claims, US weekly jobless claims seen underscoring deepening economic slump. In a Reuters article, what it says here in the Reuters article is that millions more Americans are likely sought unemployment benefits last week, lifting the total filings for claims over the past month above an astounding 20 million, which could underscore the deepening economic slump caused by the coronavirus. According to Goldman Sachs, Briggs, economist there, he says that we expect that claims will remain elevated in the coming weeks as states struggle to clear backlogs and more companies lay off workers in response to the shutdown. So if you like watching the WWE, maybe, or you don't, they had to, they were seen as an essential business in Florida, but even they're following their employees, and not just for World Wrestling Entertainment Company, but for other companies as well within the US. You're seeing the huge amounts of people just filing for initial for unemployment claims, which is putting a lot of pressure. You've got to consider America isn't built to take on so many people filing for initial jobless claims. It's not built for that. It's built on the idea that the federal or the Fed or the federal government doesn't play too much of a role, particularly in a Republican party. That's more of the case where the Fed peels back its involvement within state law or state actions or whatever goes on, unless the army is involved for whatever reason. So that's what we're going to expect. So again, still negative figures, but it is looking slightly better on the forecast compared to last week's data. Also, taking a look at another article as well from the New York Times. So, cases top 2 million worldwide as some countries ease lockdowns and others brace for the worst. So we have, so since yesterday we've had 130,000 deaths worldwide, which is bleak markers that experts say vastly understate the true spread and the toll of the contagion because of a lack of testing. Now, market reaction, again, no market reaction from that as of yet, as what we can see. Everyone is expecting that the numbers to increase and move towards the up, and a lot of the reaction has been priced in, so don't expect too much movement as the number increases globally. So if we have a look at the charts as well, just to get a better idea, see where we sit at the moment. So here, looking at the S&P 500 or the ES futures, we're not seeing. We did see some negative reactions yesterday, of where we did see some movement towards the downside, but now that's kind of peeled off, and we're seeing a little bit of a resurgence before the market open. We're up by 0.40% around there. If we took a look at a daily chart as well, again, we are reaching that level, our level of resistance here at 2,882. That's expected. That's where we're most likely going to head, considering this rebound that we have, but it is slightly peeling off. There's not too much strength coming off of this little resurgence that we have on ES futures. Okay. Also, if we took a look at a final article as well for the day. So, the great fall of China's economy and GDP is set for a historic plunge. So this is from an Al Jazeera article. Now, at night, we do have Chinese data coming out. Now, that's at 10 a.m. Eastern time. The forecast for China's GDP year over year, previous is 6%. Forecast is minus 6.5%. So there's this huge contraction that we're going to see, or is expected to be seen by economists as well. So here, what economists are saying, that most analysts expect this will be a historic contraction in economic activity. China has not recorded a 3-month period of economic contraction since 1992, when it started publishing quarterly data on its GDP. So again, this is as expected. Looking at Chinese data coming out pretty soon, Chinese data coming out at night tonight, that is as expected to see some really bad figures coming out from China. But as China comes back into action, those numbers will improve. But as it says in the article, for 3 months we've had negative figures coming out from China. So hopefully at some point that will peel off. Now, if we have a look at the USD CNH, okay, this is where we currently sit on the daily chart. So here you can see the dollar appreciating in value, or continuing to appreciate in value against the Chinese yuan. Chinese yuan weakening here as things go on, but things are stabilizing a little around this point here. We're not seeing too much movement or too much action going on from the Chinese, from the currency pair. So it does show we are in a stabilizing a little bit, are we? Well, we're reaching a little bit of a top here, just creating our own little top. So we've created a new lower low here. Not too much of a difference on the compared to the previous high, or compared to the previous high there. But again, shows that shows that the Chinese yuan is peeling back some of its losses from the last 3 months or so. Okay, that is your market morning briefing. Thank you for listening to it. Don't forget to like, share, and subscribe to the channel. And we'll catch you soon. Thank you very much.